Yeah,
We are live on
we are live. Okay.
we're live on Zoom, we're live on YouTube. I am noting it is 4:59, but I think we can go ahead and make a start. I see people from the waiting room are slowly trickling in, so that's great. Welcome everyone, both on Zoom and on YouTube today. Today's topic is how to protect yourself financially during divorce. And, quite frankly, divorce is as much a financial transition as it is an emotional one. And whether you're just starting the separation process or you're already negotiating settlement terms, protecting your financial stability really should be a top priority. And this event today does cover how to assess your finances, document assets, avoid common pitfalls, and truly plan for taxes and retirement so you can move forward with confidence. If you are joining us via Zoom today, please use the Q&A feature to submit your general comments or questions about this topic. If you are joining us via YouTube today, unfortunately, you don't have access to this function. But just to make a note, if you are going to be asking specific questions about the details of your family law matter, please contact our team directly. We won't be answering any specific individual questions today, just broader general topics. And the purpose of this series that we have going on is really to discuss general information on separation, divorce, and other family law matters. And any information that is provided today should not be construed as legal advice. As always, stay tuned until the end of our webinar, where we'll be sharing how you can schedule a free initial consultation with one of our lawyers here at Russell Alexander. Now, to introduce our panelists for today, we have Mr. Mark Simpson. He is an associate lawyer here at the firm, guiding clients through family law with solutions that save time and resources. He previously ran his own practice, gaining experience in trials, mediations, and arbitrations, and now serves as principal to the firm's articling student, Jen. Mark is a father of three teenage boys. He's coached two baseball teams over the past 3 years and enjoys mentoring. He has also served on the Hamilton Road Business Improvement Association board, and outside of work, he serves on the Middlesex Law Association, as well as the Oak Ridge Optimist baseball boards, and pursues his passion for health and fitness. Mr. Golan Yaron is an associate family lawyer as well as a certified mediator with over 25 years of legal experience. He was first called to the bar in Israel in 1996 and then called to the bar in Ontario in 2003. Golan does have extensive experience in representing clients and negotiation agreements as well as trial work. He is also has tremendous experience in negotiating with the authorities to advance a client's interests and has represented clients at various levels of court, including on appeals. As for myself, I am a compassionate family lawyer here at the firm, driven by a deep desire to support families through challenging times. With a background in commerce, I bring strong negotiation, analytical, and critical thinking skills to my legal practice. And during my articling period, I gained confidence in handling a wide range of family law matters. I do emphasize active listening, clear communication, as well as show empathy, fostering a comfortable environment for clients. I am certified as a collaborative lawyer with the Ontario Association of Collaborative Professionals, and thus I offer clients an alternative dispute resolution approach to avoid court. Outside of work, I am a dedicated Toronto Maple Leafs, LA Rams fan, and enjoy playing hockey and watching comedy movies. So, with that, let's get into our topic for today. And we have a lot of great subtopics. But first, I'm going to dive in with our first subtopic of the day, assessing your current financial situation. And at the start of any separation process, each spouse, as under Ontario family law, is required to paint a financial picture. And that's really crucial for determining what's called the equalization of net family property, as well as it also helps lawyers determine support obligations and entitlements. And under the Family Law Act, which is Ontario legislation, each spouse must calculate their net family property. And essentially, what they're doing is they are seeing what they owned on the date of separation, and they're minusing what they owned on the date of marriage. And there are specifics in relation to certain exclusions, but we're not going to be talking about that today. But really, what that allows you to do and allows your lawyers to help you do is It allows you to create a comprehensive financial snapshot of where you're at on separation date, which is also known as valuation date, as well as your present financial circumstances. So, what are the financial statements allow you to do, or it requires you to do, is it asks for you to list all your assets. So that includes your bank accounts, investments, pensions, RSPs, vehicles, real property, business interests, as well as all your liabilities. So that can be mortgages, loans, credit cards, lines of credit, etc., as of the date of separation. And we also look at those values at present date. And what that does is allows us to really understand what your current financial position is, as well as what it looked like on date of separation. And that information provides us with who out of the two spouses should be providing an equalization payment to the other. What it also allows us to do is it allows us to understand your income sources. So your lawyer will review your most recent pay stub. They'll look at your tax returns as well as your notices of assessment for the past 3 years. When your issue, if it is dealing with support matters, whether that be child or spousal, income is determined under the child support guidelines as well as the spousal support advisory guidelines. And this income disclosure allows us to determine what a person's obligation is. Um, at that point, too, there's a section where it details one's expenses. And it's really important that you're tracking your monthly expenses because this helps assess both temporary as well as post-separation support needs, especially when you're arguing for or against spousal support obligations, right? And a budget is also required in a Form 13 or a Form 13.1 financial statement. Those are the two statements we use, and that is filed with the court if your matter is in court. It's also really important what we tell clients is that they shouldn't be relying on assumptions. So many clients assume that assets are joint just because that they were acquired during the marriage, but the legal analysis really does depend on ownership and valuation, not usage. So it's really important that you are seeking professional help early. A lawyer is really able to advise you how to preserve evidence and prevent asset dissipation. That's really key. And a financial professional or divorce accountant can help with valuations, especially for complex assets like businesses or pensions. But before you can protect what you have, you really need to know what you have, right? So in Ontario, your date of separation financial disclosure really does form the foundation for property division, equalization, and support. And it is your starting point for every negotiation and court process, as well as really able to give you a clear picture what your current financial situation is. And with that, Mark, I know I touched briefly about relying on assumptions and joint versus sole. So can you maybe dive into how a client can identify marital versus individual assets? You're on mute. Backtrack, start again.
I'm sorry. Hello, everyone. So, on the topic of how to protect yourself financially as it relates to Joseph's question of differing between individual and joint assets, the equalization scheme is simply to calculate the value of property, doesn't change ownership, doesn't change who initially owned or acquired the said property. The fact that you're married as spouses doesn't give one of the spouses over the other an ownership right of said property. A bank account, for example, a pension. Pensions are usually the easiest. So there'd be a spouse with a pension, and on separation, to protect oneself financially, I think we'd all agree that the spouse of the pension member, that's their pension. That concept applies for bank account, house, if they're a joint law and title, sole law and title. To protect yourself financially, I would say is to make fulsome and proper financial disclosure, not making estimates. A lot of risks can be made, errors can be made when we're dealing with estimates or not most accurate account and information disclosures precisely as Joseph has outlined on the date of separation and on the date of marriage. The individual property, most common forms that family lawyers may see, gifts from outside the marriage to one spouse, inheritances, personal injury damages, most of everything that's excluded from the calculation of net family property would typically be individually owned. That's safe. It's not always going to be the case, but it's a fairly good generalization. You might have an instance of a joint account, and one spouse deposits money into a joint account of X number of dollars, and another spouse deposits Y number of dollars into a joint account. And then the question is it their respective monies or is it joint money? In Ontario, in the Family Law Act, to complicate matters or codify matters as set out in the PACOR decision, I believe, we have Section 14 of the Family Law Act. I realize I said complicated and then codified, but I should say codified matters to make it more straightforward for understanding what's going on. Without evidence to the contrary, if it's in a joint account or it's in a joint investment or a joint asset, it's a rebuttable presumption, but the idea is that that would be intended to be held jointly. So there are cases out there that deal with those issues, and those cases don't necessarily align with the point I just made. But most of the cases would say, unless the one joint owner who simply has the name on the account can rebut the presumption, or I guess it would be the other way. The joint owner who's made the contribution into the account can rebut the presumption that it wasn't intended to be held jointly. It would possibly be a joint asset. So even contribution is not really a good, accurate guide or compass for us to determine if it's individual or jointly owned. Best thing, as I said, is that we look at ownership and the all the wonderful work that Joseph outlined, respect of getting the disclosures and calculating the values, does not actually impact ownership. If your name's on something, your name's on something. Joseph, do you have any suggestions arising on that, or should we go to the next topic?
I
I
believe oh, sorry, Golan, what were you gonna say?
No, no, I'm suggesting to try to capture all the topics that we want to cover,
Mhm.
especially in a generic form. Let's move on to the next one. And perhaps just to lighten up the mood here, everybody should remember that when you say that you are a hockey Maple Leaf fan, we don't want to antagonize the Canadian fans out there, and we all Blue Jay fans today. So I'm
We
sure
do.
that this is kind of across the board. We don't have any competition there with the Montreal Canadiens or anybody else.
Fair enough, but
So
that's why I'm wearing my Blue Jays jersey. It's after hours,
there you go.
right?
I figured you failed to mention that. I was like, this is the one thing that we have consensus across the board.
No,
All
you're
right.
right. I should
So
have mentioned it. So Golan, do you want to maybe discuss how when clients are going through this process, how they can be taking an active, or I should say a proactive approach in monitoring their accounts, especially maybe the months prior to separation and especially the months post separation.
well, that's the topic of before separation is kind of interesting because we kind of implying that there is a planning to separate it, and therefore there's got to be some preparation going along with that. Um, let's stick to the point that we are trying to make here is that we want to maintain records and the records to help us uh, move through the various events once you are at the point of separation and perhaps started litigation or hopefully have not started anything yet and trying to explore some option for negotiating agreements beforehand. A The concept of disclosure, as you mentioned earlier, is a pivotal to any agreement. So what we expect people to do is to have records of their assets value, and that goes to, I mean, at the beginning, it would go all the way back to the date of separation, of the date of marriage. Um, at some point, sometimes we're talking about separation after 10 years, 20 years, 30 years. That becomes a real challenge when people are trying to kind of record what they had on the date of marriage, if they had anything at all. But that's the importance of, and today's with the, technology and an ability to obtain things quite easily, even over the internet and just using your mobile phone sometime, you should be able to at least keep record of your banking information, take a snapshot of the date of separation, um, statement of accounts. It could be from your US accounts to your RRSPs to anything else that you had. Because other things we may have to go deeper in terms of valuation. I think Mark mentioned earlier the issue of pension, and that sometimes require an actuary or a pension valuation by the plan administration. And but this is kind of the documentations that one would have to obtain if and when it becomes a requirement during the process of negotiation slash litigation. So when we're talking about importance documentation, even at the start of anything, when we try to kind of evaluate one's income, we expect there to be the tax returns for the past 3 years. We normally start, this is a starting point. So the past 3 years, notices of assessments, the T1s, or if you had a corporation, the T2, these things have to be readily available. So, and it's going to be disclosed sooner or later. So the courts have held many times that it should be disclosed earlier than later. And in fact, even before litigation commences. So the idea of having some tax documents available and have access to your online CRA account, that's something that could be valuable. You want to maintain that. Similarly, you would have access to your current bank accounts, credit card statements that you have used over the past few years. And these are documents that could be called upon to determine various issues from spousal support to child support to arguing about what is the appropriate level of income that one has, especially if one is self-employed. This is where most of the arguments regarding imputation of income comes in. What I mean by imputation is that it's not what the person actually reports, but rather what he actually earns, and that can be determined in various ways, from a simple looking at a tax return and analyzing expenses versus receipts, all the way to a more complex situation that requires a professional valuation of one's income or the actual business asset when we're talking about corporations and other entities that are not as simple as just a T4 employee. So there could be many aspects to the depth of the documentations that we may look for. But for somebody who's, for example, wants to rely on a gift that he had received or inheritance that was received, these things got to be documented. These things must be available to prove if you want to ensure that you're getting the right a exception or deduction for any specific assets that may be um, you know uh, eligible for such categorization. So having a statement of the gift that was received or the inheritance that was received from the administrator of an estate would definitely be beneficial and helpful when the time comes if it is disputed. And from my experience, 9 out of 10 situation of estate or gifts are being um, disputed very, very often. So this is the kind of the importance of the documentations and maintaining the records when we're looking at a getting the fair and appropriate outcome for the post-separation situation. So the analysis of the equalization and the support, whether it's income or whether it's spousal or child support, for that to be more accurate, the better the documents and the records that you maintained, the easier it is to maintain and to determine these issues. So that would be my, general idea of the importance of the documents and maintaining the records.
Mhm.
If any of you have anything to add, feel free to
Yeah,
jump in.
I think you covered all the basics, and I mean you went pretty in depth, which is definitely appreciated to our viewers. I just think a lot of people have the mindset that full and honest financial disclosure is something that's optional. However, it's not. It is something that's mandatory. It's required by law, both in the family law rules if we're dealing in litigation setting, but any agreements that you make, whether that be a separation agreement, a prenuptial agreement, a postnuptial agreement, as part of the Family Law Act, in order for it to be a domestic contract, there needs to be the exchange of full and frank financial disclosure. So that's, really, really important. It's something mandatory. And I like what you said, Golan, about keeping track of documents, because there is a saying that I heard from another lawyer. They said in family law, the person with the best paper trail usually wins. So I think it's really important to really keep a tabs on your statements, and especially as Golan mentioned, if you're trying to seek exclusions of certain property, such as inheritances, gifts of that sort, you need to be able to prove the source and trace the funds. So that's very important. Um, let's move on to ways in which a party or a client can protect either a joint account from being depleted or a joint liability from incurring further debt post-separation. I'm going to hand this over to Mark to discuss.
Thank you, Joseph. It was very well said, Golan. The transparency of an objectivity of the financial records that Golan is suggesting be maintained with any spousal communications or discussions, if there's large purchases or large withdrawals, available credit lines, significant balances. When we have the documents that Golan has suggested rightfully, that each spouse, separating spouse obtain and set aside, emphasize importance on that. And be sure to read the documents for those things. Is there available credit? Is there a large balance? And while you're in the midst of the separation process, you should monitor the joint accounts and joint liabilities on a regular basis. Now, Spouses by law are not to help themselves to the balances of the joint accounts, regardless of how it was arrived at, or further incur and thus increasing the indebtedness on a joint credit line or joint loan. And since it's being suggested to maintain the documents, we're working within a transparent process. It's also suggested that if spouses need to make a significant withdrawal or need to borrow from joint credit or joint loan, that the conversation, ideally through counsel, on behalf of or with respect to each of the spouses, occurs so that any activity at all with respect to joint accounts or joint liabilities is on consent. It's very important. If there is a withdrawal from an account or further indebtedness on a loan or credit line, for example, it could lead to situations of further eroding trust. And that could have ripple effects on other family law issues in the case as well. So Golan has very nicely set out a really good, helpful, transparent approach to the documents that you should have. And each of the spouses should show some respect to the other, maintain those balances and the indebtedness as best you can without further incurring any further indebtedness, making withdrawals. But if that were to have to happen, it should be completed in an open communication style with the other spouse, ideally through counsel, as mentioned. There are one of the trickiest situations on the joint accounts and joint credit lines, etc., of what we're talking about right now is where there's multiple rental properties and the tracking of the rents and the expenses becomes an absolute nightmare. The better job one does in that situation to make really, really clear records, save all of the statements. It probably, if you're going through a separation, it probably is worthwhile to figure out what your plan's going to be to keep all of the records together. I've seen countless times with more than one rental property, joint account, joint credit line, joint loan, where it's actually significantly prolonged the case. So take to heart what Golan has outlined, and especially remember that as situations may become a little bit more complicated, because adding some emotion and some complex facts to the situation, and all of a sudden you're deviating from the transparency and might not be the best time to do that. Back to Joseph.
Thanks, Mark. That was great. Golan, do you have anything to add to that?
Well, I think it's also connected to the next topic, I believe, the monitoring of the accounts and the records. I would say that not in all situations we can expect the ongoing trust and transparency post-separation. There's obviously a reason for the separation, and most times it has to do with that lack of trust and transparency. Nevertheless, in a joint account situation, you both have access to the accounts. Same with the joint credit lines. These are the type of things that you're able to actively monitor and see what's going on. Um, I, from my perspective, or at least my suggestion at times is that there should not be more than the need to be. Meaning, if it's an account that has been set up to look after the mortgage, property tax, and insurance, then this is really what we trying to maintain. We don't have to dump large amount of money in there and then hoping that the other side is not going to help themselves to what's there. Because legally speaking, a joint account allows for either party to utilize or at least have access to the funds that is in there, the same way that both parties will be jointly liable for any shortfall or a deficit in that account. So from the banking institution perspective, it doesn't matter if you put in 20 grand and the other side did not put anything in to a joint account, and then the amount that was withdrawn by the non-contributing party was much larger or unexpected. That's not of the banking institution concerns, and that just makes our jobs later on more I would say adversarial in that we're really looking at the post-separation adjustments and looking at what each party was using post-separation from joint funds and joint resources and trying to kind of allocate um, the post-separation a contribution or deduction. And then we have to do a better mathematical a analysis between the equalization and then go into the post-separation analysis of how funds and joint accounts were used or joint line of credit was used, um, for the benefit of one party versus the household as a whole. That becomes also sometimes muddy because one can argue that the amount was withdrawn for, looking after the household. Another would say, no, it was a personal, because you just went and bought yourself a car with borrowing from the line of credit, whatever. So this could be all kind of stories that makes this more complex. That's the reason I suggest that parties can firstly direct the banking institution that on a line of credit, for example, they could direct the banking institution that there should not be any further withdrawal, only deposits. From what I understand, the banking do respect that kind of instructions. Um, and this way, that prevents that ongoing depletion or increasing the debt load of the parties. Similarly, in a joint account, for example, just to limit the the deficit. So, the account, as long as the account is not in deficit, bank would appreciate at least respect the instructions to not go into a overdrawn in the account. This way, if there's no money in the account, nobody can take any further funds. Um, with the hope that parties, even when after separation, do cooperate for the benefit of the household and the children and maintaining the normal expenses that are needed. Um, you nevertheless have to kind of be looking at things and see that it's not falling off the rails and they're not in balance any further because sometimes it happens. It depends on Joe mentioned the emotional roller coaster at the beginning, and that sometimes takes precedent over a reasonable thinking and doing the right thing. So kind of what drives you to do things not in the right way. So that's kind of my comments on the topic. Maybe I already stepped into the other topic as well of monitoring the credits and the accounts.
No, it's
That's
okay. Completely,
that's my
completely thorough. Thank you. Um, that pretty much sums up the steps that you can take as you're going through this process to ensure that any joint accounts are protected. As always, your lawyer, if as we always recommend that you do retain a legal expert as quickly as possible to hopefully not get into these issues and deal with things preventatively. And I always deal with things looking at it, hindsight, being proactive, with foresight, all things that you should be doing ahead of time. But now we are going to transition our conversation to how you can avoid financial pitfalls. And I know that the topic notes it as scams. I would not necessarily classify them as scams, but that's how it's been noted for today. But as already greatly discussed between Golan, Mark, and myself, financial vulnerability is high during separation. And parties are often facing pressure, misinformation, or sometimes even manipulative tactics from the other spouse to either get a financial gain or maybe put someone in a worse financial position. And as already previously mentioned, under Ontario law, full disclosure and fairness are truly prerequisites for binding separation agreements or any other domestic contracts for that matter. And if you are misled or you are pressured into signing something that you did not have the ability to seek guidance on, it is possible that the agreement can be set aside at a later date. But what I do like to advise clients, and I'm sure Golan and Mark can speak to this, is I like to tell clients to be aware of what I like to call early informal deals. So no client or no person should be signing either written or verbally agreeing to any real division of property, support arrangements, or debt sharing without independent legal advice. And sometimes, even if there is an agreement put to paper signed, they still may be used against you later on, even if you thought that they were temporary. So don't be signing any agreements put in front of you by your spouse until you've had the opportunity to speak to a lawyer. I would also suggest, and I do advise clients, that it's really important to separate finances immediately, but do so in a careful manner. And what I mean by that is that if it's possible, open an individual account. And you should be redirecting your pay deposits to go into your personal account. Joint accounts, as Mark said, can still be used for shared expenses, but it's really important that you're tracking all transactions. And as Golan mentioned, if certain individuals or certain spouses are using joint accounts, whether they are, joint bank accounts, checking account, savings account, or they're a liability, so if it's a joint line of credit, we can look at how post-separation adjustments can deal with resolving that. At a later date. But what I do like to advise clients is that they should not be draining accounts. Um, that can often be seen as bad faith. It can hurt your credibility if the matter does go to court. So I don't recommend ever draining accounts or withdrawing large sums of money from joint accounts. That said, how to help yourself be financially independent post separation? Again, opening up your own bank account and having your pay being redirected there. Um, as Golan mentioned, it's really important that you should be keeping an eye or at least monitoring your accounts for misuse or identity. Um, and more often than not, it's really important to be keeping a eye on credit reports. You can do so via Equifax or TransUnion, both are reputable, as well as you should be taking necessary steps um, to avoid emotional spending or with revenge withdrawals. So courts can order some compensation if a party does dissipate marital assets or if they are incurring unnecessary debt post separation. So it's really important to focus on transparency. It does strengthen your negotiating position. It does strengthen your position in general if you're in court. And don't be again depleting accounts, draining accounts, with revenge withdrawals. These are things that should not be taking place. Um, and I would also be very cautious of divorce financial scams. And what that means is be cautious of online quick divorce or DIY separation agreement services. Often they promise cheap solutions, but more often than not, they don't meet Ontario legal standards with respects to domestic contracts. And really and truly, a flawed agreement can cost far more to fix than doing it properly from the outset. So really important that you're not seeking legal advice from someone who is not a lawyer, and you should really be getting that first-hand assistance right at the time that you know that separation is going to be occurring, or if you have an idea that you think you might be wanting to separate from your spouse, that's also a great time to speak to a lawyer. Um, and, honestly, what I like to tell clients, when they come in the office and we're having a discussion, usually the introduction call, um, I like to tell them that the biggest financial mistakes during a divorce or a separation aren't made by accident. They're usually made in haste or made in fear. So it's really important that they slow down, seek advice, and again truly emphasize that they don't ever sign or transfer anything until that they understand the legal implications of doing so. So that's sort of my roadmap as to how to avoid being put in a vulnerable position. Golan, Mark, anything to add to that?
Well said, Joe. Only, I think on one topic that I would suggest to people generally is to ensure that they have access to funds. This is one of the eventualities where parties may have are going to be pressured through economic pressure, whether they been relying or dependent completely on the other spouse for funding, for paying for house bills and for groceries, and even for your legal fees. So ensuring that you have that access to funds, whether it's by having your own personal credit card upon, upon separation, that would be important to have to not be at that position of um, suffocating financially, and then maybe causing you to agree to something that you wouldn't agree otherwise, just because you did not have the ability to obtain independent legal advice or to um, oppose the proposal that was, put forth. So that's something that I suggest that people will be mindful of. Access to funds and resources is really important at that time of crisis. That's my comment on that one. I think we can move on to the next topic, Joe.
100%. So I guess with that, I mean, I've already brought up the idea of seeking legal advice, when to do so, which quite frankly should be done immediately once you realize that separation is looming. But maybe, Golan, can you speak to working with not just lawyers, but financial advisors as well, when we're going through this process?
Well, then, of course, thank you, Joe. But what normally happens is this uncertainty of financial position for those who have not been running their own investments and their own or the family's properties and running the finance side of things. It becomes critical to understand in order to firstly de-stress themselves as to what's going to happen. How can I afford living in this place or another? Do I have the children with me? Do I need to do something different? This is where you need that professional advice, uh, whether it's financial or lawyers. But since we're talking about the finance side of things, having a financial advisor to help you navigate and understand what you have available to you and how it should be invested for dealing with the transitional period of between the time of separation until you get sorted out with the equalization and the money that's going to be available to you once things are settled. This is where you are seeking to have a professional looking at the big picture, not being attached emotionally to the situation, and giving you a better financial stability in how you're going to move forward and what steps you should take to ensure that you would have this a financial independence, whether it's going to be at this juncture or whether it's going to be in a future settlement. It's always going to be a smart move to speak to somebody who understands and can help you achieve your goals financially. and also understand where where's your weak points in your financial planning, and where do you have to pay attention to in terms of your support, perhaps, or your income or your employment, whether you were supposed to be applying yourself better, um, or should you retire according to plan, or maybe it's not going to work that way because of the situation, and you may have to think things through differently. So this is where professional advice does come in handy, and it could take a lot of the stress off your shoulder during this time of crisis. And whether somebody planned it or initiated it, most times they kind of come to terms with the situation faster than the other party who's been not so prepared. But it's still a crisis. It's still something that, especially the longer the relationship um, was in play, and whether there is children involved, all of that is a very emotionally charged, and sometimes the tension level uh, clouds your judgment, and you want to have somebody who is able to look at things clearer and just give you a better understanding of your financial picture there. Anyone wants to comment on that, please do so.
No, I think it was well said. Mark, do you have anything to add to that?
It flows in nicely to the next topic on budgeting for life post-separation. Um, Succinctly, I would say there's 5 or 6 items on this issue about how to budget for life post-separation. One, we want to be able to assess the income and expense. And part of that is that we want to anticipate whether we'll be paying or receiving support. Want to account for all of the monthly expenses. Want to have a good understanding of what income sources we have available going forward. The school and Joseph have both outlined planning and preparation for the post-separation period is very important. There's a lot of understanding of the new financial reality. Post-separation lifestyle adjustments may be required. Obviously, we're going from one household to 2 households, which costs more money. We want to identify areas where we can kind of trim up the expenses. If we've got certain expenses that we're kind of on the fence about when we were before separation, we're paying for certain luxuries or paying for certain TV subscriptions or something or whatever it is. We probably want to make a really the priorities and objectives of how we set up our lifestyle is obviously going to change. 3, want to make sure we plan for future obligations. We want to look at long-term savings. We also want to look at one-time costs. So if we have emergency funds, any moving, setting up a new household, furniture costs, and so on, that'll all cost quite a bit. Want to be able to separate our finances at some point. One point I wanted to circle back on, and separation acts as a demarcation point as of the date of separation from a property perspective for what we're talking about here. Going forward, your assets are your assets subject to family law, and the other spouse's assets are the same, subject to family law rights and obligations. The problem is if you deal with them prematurely, and then say, if you're in the midst of a court proceeding and having to explain to a judge why you took certain amount out and why you're short on being able to make certain payments, it might spin things so not in your favor that you're already investing quite a bit on legal fees. It's not really a thing to do. You want to be able to track spending. Budgeting tools and apps are obviously available. Spreadsheets to monitor cash flow. 6, professional support. So consider working with a financial advisor or a divorced financial planner. Probably the most immediate or common situation where you'd be wanting to introduce to a new financial advisor is if the financial advisor was a mutual advisor for both spouses. Um, probably just to avoid one, the obvious conflict, and two, just the awkwardness from the situation so that you can have some trust built up in the advisor. If you can find a new advisor, it might just be best to do that. That way you can kind of have a discussion about the income and expense and responsibilities and have get professional assistance to school and it's saying to kind of outline how the budget is gonna be going forward. I think to take away from those points, financial stability, peace of mind, and a really good foundation for rebuilding life post-separation. Golan, next is planning for taxes and retirement, if that's okay, Joseph.
Right, right. Actually, it all intermingled with everything you said because one of the things that happens in separation sometimes is throw people off their plans. Some of the plans could have been, I was going to retire next year. Well, you may not be able to afford that now. Sometimes it means we're going to withdraw some money from our RSPs or TFSA. You have to think of the tax consequences of doing that. It's been sheltered so far. Now you're pulling the money out. You are at a certain tax bracket, maybe not the best one that you were thinking about when you would be on in your retirement stage. So these are things that we normally ask people to speak with their accountants, get a tax advice, especially if it has to do with something more complex like corporations and shares and estate planning as well that fall into that a financial a arrangements for retirement. Um, Obviously, your industry that you're in, your age, your plans, and available resources to actually, put your plan of retirement into action uh, may need to be adjusted. I mean, the impact of the separation and or divorce on your plan could be significant. All of a sudden, there are other obligation and ongoing obligation, whether it's child support or spousal support, that may change your plans or may require you to work longer. Um, these are some factors that can affect your retirement plans and also your tax consequences of whatever it is that's going to happen as a result of the divorce. Now, some of the general things that you have to pay attention to in the divorce is, for example, when a person is receiving spousal support now, that becomes a taxable source of income. Um, it may be deducted to the person who's paying it. These are the type of things that you may have to consider when you adjust your budget for going forward. Other aspects of the separation could be sale of properties. Some of them may attract capital gains. Another significant tax consequence of a divorce and splitting of the assets and liquidating the assets. Similarly, with like I said, with the RRSPs and other a disposition of assets or paying off of debts and credit cards, etc. So all of that has tax consequences, has a effect on your retirement and would affect your retirement plans as you go forward. So definitely, things to pay attention to as you make your plans with your advisors, with your lawyers. All of that has to come into play.
100%. And I think that's a good segue for closing off today's webinar. Um, to our viewers, thank you so much for tuning into Family Law Now After Hours. After this session, if you are joining us on Zoom, a brief survey will appear, and that will allow you to share your comments and suggestions for future topics you'd like us to explore. And as always, your feedback is greatly appreciated. Um, Also, now that you've made it to the end, you are able to book now to take advantage of this opportunity for a complimentary 20-minute consultation with one of our lawyers here at the firm. In order to take advantage of this opportunity, please contact our intake team at intake@russellalexander.com. That's two S's, two L's. And be sure to mention our after hours series to be able to schedule your appointment. Registration is also now open for our next event next Tuesday night, parenting time and decision-making responsibility. So I think that's going to be a really interesting topic. Last year when we ran it, we had several dozen viewers. It was a widely attended topic, so be sure to attend that. In order to register, just go to russellalexander.com/family law now. Thank you so much to our panelists, both Golan and Mark. You're both great. Thank you for sharing your insights today, as well as thank you, the viewers, both on YouTube and on Zoom, for tuning into Family Law Now After Hours. Wish everyone a great night and go
Joseph,
Jays, go Jays, go!
Let's do that.
Right?
go Jays, go.
Thanks, Mark. Thanks, Joe. It was great.
Thanks, everyone. Have a great night.